Welcome back to the Dividend Diplomats YouTube channel. You got your boys, Lanny and Bert. The Dividend Diplomats. Lanny, I have some exciting news for you and the community. One of my favorite dividend stocks is on special right now. This stock has dropped well over 8% in the last month. It has gotten pummeled in this last week. That yield is soaring. That yield is well over 5.5%. Guys, we are going to take a deep dive on my favorite dividend stock today.
Guys, before we do, smash that subscribe button. Give us a nice thumbs up. We are so close to the 20,000 subscriber mark. And we ain't going to stop putting out videos until we get there. And even when we do, dividend investing and money doesn't sleep. The diplomats don't sleep. So, Bert, one of your favorite dividend growth stocks is here, huh?
Yes, it is. That's absolutely right. Because in this last week, you have seen the stock market take off. You've seen interest rates take off. Everyone's like, the market's green. Everything's green. You're seeing your portfolio soar, except for one sector, Lanny. There's been one sector that
Hmm.
isn't taking kindly to interest rate increases. What sector are we going to be covering today, Lanny?
Well, despite Fed cutting rates again today, here, November 7th, that might affect the short term of the borrowing or rate curve, but those long term rates are staying high. If anything, they're getting higher, which is not good for the real estate investment trust industry,
Mhm.
who typically borrows to acquire and grow and to fund their operations, which means the REIT industry has been actually getting punished because of what is happening.
Yep, and my favorite dividend stock, this favorite dividend stock that pays monthly dividend. This
Ooh.
REIT that increases its dividend every single quarter is going to be featured right now. Guys, we are talking about Realty Income. Ticker symbol. Oh, we actually talked.
Oh,
Yeah. Oh, it's true. It damn true, Lanny. We talked about them a few weeks ago in the high 50s, and I was loving them. Since then, post-election, post-interest rates creeping up on the long term, REITs have been coming down. Realty Income continues to slide, Lanny. They are at 56.38 at the time of this video.
got to love that.
Yeah,
Wow, 56.38. Because Bert, what has happened the last month to the stock price?
stock price down 8.58%. And with that, though, Realty Income just recently released earnings. Actually, right before the election, they released earnings, and it was interesting. AFFO per share was $1.05. It was a 2.9% growth last year. So you saw some adjusted bottom line growth there for them. They currently are raising their AFFO per share guidance, Laney. They're increasing that guidance this year. So that's fantastic. They also say their debt, the thing that's most concerning for REITs right now, because borrowing costs are going up, is well within the managed target range, where annual debt to annualized pro forma adjusted EBITDA is 5.4x when they target 5.2x. So it is right in line with their target. So things are humming along here for Realty Income right now.
Yeah, looking really good right now. I mean, in the target range, the net debt, to pro forma EBITDA, like you said, is perfect right there. The coverage ratio remains in line. I mean, again, the occupancy rate is so solid. They have tens of thousands of properties. And Bert, the best part about O, though, is the 108 consecutive quarterly dividend increases. Guys, they are a fun dividend growth stock to own.
Yeah.
Every quarter, you get that little bump, and they give you a little extra on one of those quarters.
That's right.
Now,
And the
but
other
Bert,
thing,
Bert, I'm pretty concerned, though, right, about some of these tenants that they have.
ooh, yeah, you should be concerned, right? You absolutely should be concerned because certain retailers are announcing closures. Certain companies are announcing bad times. However, Realty Income's kind of insulated themselves from it a little bit because they are so diversified. They aren't overly exposed to one sector or one tenant. In fact, their top 20 tenants, we're going to put the chart up here from their website. Some of the names include Dollar General, Walgreens, and Dollar Tree. You know what, Lanny? Those are the only
Wow.
three that are over 3% of their total tenants. They have 7-Elevens, Wynn Resorts, Lifetime Fitness, FedEx. CVS, some other like AMC's, Walmart. So they are very spread amongst industries. So sure, CVS, Walgreens are struggling right now. They've announced some store closures, but they're not overly exposed because it's just such a small pocket of their portfolio.
Well, it's pretty nice to know that despite the trouble within these types of tenants, they're all really renewing their leases.
Yeah, that was an interesting piece out of their earnings transcript. They actually called this one out. One of the analysts had asked, "Are you concerned about some of the store closures?" They said, I'll put the quotes up here. Walgreens, they've announced 2,000 store closures, reduced it to 1,500. They've had 13 Walgreens go up for renewal. They've renewed them all. CVS, similar story. 40 of their leases that all came up with CVS renewed. Same with Family Dollar, Dollar Tree. 135 leases came up. They renewed them all. So even though there's trouble, even though those places are closing, they're not closing within the Realty Income portfolio. So I think that's a
Mm,
very fascinating little nugget that we were able to pull out of that earnings transcript.
mm, 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 mm.
Mm-mm.
So they're tempering the bad news from the other tenants. They're doing well financially. They're within ranges for a lot of their coverage ratios, when it comes to debt. Um, Now, what about the stock metrics, guys? We're going to run them through the DD stock screener, focused on the price to AFFO ratio, the dividend payout ratio, using that dividend to the FFO, looking at the dividend growth and the dividend yield. Is the yield back over 5.5% is going to be the big question, especially now that it's cracked well below the $60 per share. Are you ready, Bert?
I am. So let's kick this off. Their price, as I said earlier, 56.38. FFO is 419. That's a price to FFO ratio of 13.46, well below the market. What
Ooh.
about that payout ratio here, Lanny? What's it?
So even with that 419 FFO, that dividend's $3.16 on the year. So that's a conservative 75% dividend payout ratio, brother.
That's right. That's very low for the REIT sector. Their 5-year dividend growth rate is 3.55%. They've increased that dividend for 27 consecutive years since they've done 108 quarters of consecutive dividend increases. So the thing is, they increase it slow and steady. They never wow you with their dividend increases. In fact, some of the quarterly increases are fractions of pennies, but over time they add up. They throw in one or two big ones, and time after time, it's about 3.5% when you lump it all together. So not
Yeah,
bad.
when Bert just starts saying time after time,
That's
if
right.
you buy, oh, never mind.
Yes. So that yield, we asked, is it above 5.5%? You bet it's above 5.5%.
Yes.
5.6%. That's above their 5-year average yield of 4.75% by 85 basis points.
Wow, there you guys have it. Over 5.5%. Again, down 3.74% this year, down almost 10% in the last month, down 24% in the last 5 years. Guys, is this the time to buy and capture realty income? Is this the other window of opportunity that you may have missed, when they cracked above $60, just recently? Is this the window for O?
Yeah, and I'm going to tell you right now, it's shooting up my watch list. I'm setting a target of between $55 and 55.50.
Ooh.
That's going to be where I'm buying, so it really doesn't need to come down that much more.
Now let's get a nice little 1 to 2%, twist down here on the stock price from my man Bert the Herd over here. Now, Bert, I remember you had a little fun challenge. You wanted to get the $50 a month from O, or was it $100 a month
It
from
was
O?
$60 a month.
Like it was $1,000 a month.
Yes, 10,000, 13,000. It was 60. Yeah, it was $60 per month, and we got there. But you know what? I'm not going to be afraid to add more. I'm not going to be afraid to keep adding those dividends. I hold it in my Roth. There's no tax implications of those dividends received. So let's just let it keep churning, keep eating, and keep seeing this position grow.
The road to $100 a month of realty dividend
Ooh,
income
that's
is on the path for Bert.
so everyone, let us know what you think of Realty Income. Are you liking REITs right now? What are some of your favorite real estate investment trusts? Follow below. If you haven't already, subscribe to the channel. Give this video a thumbs up. And remember, you're either with us or you're against us, Jack.
That was Bert the Herd and Laney from the Dividend Diplomats. Over and out.